All right, it is just after 10 o'clock. Good morning, everybody. My name is Elizabeth Rico, and I'm Outreach Manager for Leadership and Business Development here at the Arizona Farm Bureau. And we are wrapping up 2022 with our final webinar Wednesday of the year. And I'm really excited to have Christy Gillen Bradford with us from Arizona, from Farm Bureau Mortgage, I'm sorry. She's based out of Arizona. She's going to be talking with us a little bit about the road to home ownership, tips and tricks to make that buying process work for you and really make you comfortable with the whole process. So before we let her introduce herself, let's set some ground rules. While we can't see or hear you, there is a Q&A or a chat feature. If you have questions, go ahead and ask those. We can ask those as we're going through the presentation, or at the end, your questions may be answered. If you would like more information on some of the things that we share with you, you can also email us or share your email in the chat feature as well. And as always, we're super glad to have you with us. Christy, do you want to go ahead and introduce yourself and give us a little bit of background of what to expect?
Sure. Thanks so much, Elizabeth. Hi, my name is Christy Gillen Bradford, as she said, and I am with Farm Bureau Bank / Farm Bureau Mortgage. And here she said to discuss the road to home ownership and working with Farm Bureau Mortgage. And we're fortunate enough to have Dominic DiOrio, who is the president of Farm Bureau Mortgage, is also attending today, and he will be able to answer some questions if we have any at the end, as well as I can answer those as well. So with that being said, we'll go ahead and get started. And let me share my
Christy, I just wanted to thank everyone for allowing us the opportunity to present today. Allowed me to join too, kind of last minute. So I'm really excited to sit in on this and here to answer any questions you guys might have.
That's great. Thanks, Dominic. Okay, so we'll go ahead and get started. So road to home ownership. Farm Bureau Mortgage's mission is in your hometown and across America. Farm Bureau Mortgage is committed to being the mortgage provider of choice for all Farm Bureau members. What we're going to discuss today is what to expect during the home purchase process. We're going to talk about pre-approvals versus pre-qualifications, the documents that you're going to need to collect, making the transition from non-home ownership to home ownership, having a professional on your team, professionals including real estate agents, loan originators, your title officers, things like that. What to expect during your home search, what you should know before taking on a mortgage, and the top 5 don'ts while you're in escrow. Looking forward to the future, meaning what you should expect after homeownership begins. We're committed to a simplified experience here at Farm Bureau Mortgage. We understand that purchasing a new home is a complex process, and that's why we are committed to making your home financing experience as easy as possible. By following the steps that we're going to discuss below, you could soon enjoy home ownership. The pre-approval and application process is really where it starts, and you're going to complete your digital loan application and prepare the following documentations for your loan consultant. And we're going to review these once again later in the presentation, but you're going to want to have your last 2 years of your W-2s from all of the applicants. You're going to want to have social security cards, driver's license, copies of your last 2 months pay stubs that will show the year-to-date earnings, and last 2 months bank statements of all of your different accounts and all of the pages. And if you're a commissioned or self-employed person, you're going to need to have your last 2 years of tax returns. You're going to want to work with a real estate agent or a realtor. They're going to help you understand the market and balance out your wants and your needs, and obviously then negotiate the contract, the best terms in your favor. Finalizing your mortgage plan would be next, and that's where you're going to work with hopefully your Farm Bureau Mortgage loan consultant, who will gather any of the remaining documents that the underwriter is requesting so that we can get to your final approval. Next, your Farm Bureau Mortgage loan consultant will be notifying you of your final loan approval. Yay, big celebratory call. We love those. And then we arrange for your final documents to get to your location for your signing. And sometimes that can be in your home. Sometimes it can be virtual. It's whatever you choose. And it's also sometimes at a title company. Here in Arizona, we use, like First American Title. There's lots of them. So your closing appointment is typically held at one of those locations, as I was just saying. You're going to want to be sure to arrange a cashier's check, money order, or wire for your cash to close. This is going to be your down payment and any closing costs that you may have. Again, this is something your loan consultant as well as the processor will be in communication with you constantly during this escrow process to let you know the exact number that you're going to need to bring to the closing table. Then Farm Bureau Mortgage will be funding your home, and yay, congratulations, you're now a homeowner. Of course, it's not quite that easy, so we're going to go over those steps a little more detail here. Pre-qualification versus pre-approval. So a pre-qualification is when a lender, such as Farm Bureau Mortgage, performs a quick check to determine generally how large of a home loan a buyer can afford. Essentially, when a buyer is pre-qualified, we notify them as the lender about how much they would most likely be approved to borrow. A pre-approval is when the lender verifies and examines the borrower's debt, income, their savings accounts, their assets, their credit report to ensure that the borrower can repay the loan amount. Pre-qualification is somewhat of an educational guess of the buyer's purchasing power, while a pre-approval is a preliminary approval for the loan amount you are eligible to borrow. A pre-approval is similar to proof of funds of a cash borrower. So this is something that we really encourage the members to get the pre-approval over a pre-qualification, especially when we're in those tighter markets like we experienced last year. And people are coming in, especially some investors, and putting cash down and making it really difficult for people that are making offers with a mortgage attached to it, because if it's not a pre-approval, it's just an educated guess. It doesn't have as much weight as somebody that has proof of funds, that they have the cash. A pre-approval is essentially the proof of funds, and that as long as everything stays the same and the home appraises, these folks are good to go. A pre-approval instantly lets you know your actual budget. Knowing what you can afford from the start helps you and your real estate agent better focus your efforts and keep you within your financial comfort zone. Because remember, just because you can afford something much more isn't necessarily what you want to do. And these are the kind of communications information we want to share with the loan consultant, so they know, although you are approved to go this high, maybe we don't want to because we've got other plans that are within our budget. In addition to that, this is a strategy that you working with your real estate professional. Maybe we don't want to let the seller know that you can afford much more, because that then could impact your negotiations. Being pre-approved, as I sort of mentioned before, it may provide you with an advantage over other buyers because it assures the seller that you're a serious contender and have access to the loan necessary to back up the offer that you made. Unfortunately, if any of you have sold any homes, sometimes people do make offers that they actually cannot fulfill. Farm Bureau Mortgage, first of all, anybody has a smartphone or a device that they can scan this QR code, this will load Farm Bureau Mortgage's contact information directly into your phone so that you have it. To apply, it's super simple. www.farmbureau.mortgage is our URL that goes to our website that will take you to our online application. You can access it from a mobile device, a desktop, laptop, tablet, anything. And we have a share my screen feature that the loan consultants can walk a member through the application process if they would like that. It's very simple. It's just basically asking who you are, where you live, where have you lived, where do you work? Very simple questions. You can also always call us. A live loan consultant is available from 7 to 7 Central Time Zone at 877-388-5354. As Elizabeth had mentioned at the beginning, if you want to submit either in a chat or email, your email address, we will get this presentation over to you. Collecting your documents. This is kind of the daunting part that most people don't like. So if you know ahead of time, it might make it a little bit less stressful. But this is a handy checklist, again, that I'd love to send to you. It's basically going to tell you what documents you need to show your residence history, your employment history, savings and checking and investment accounts, miscellaneous if you have a bankruptcy, any divorce in your history, things like that. And then it also on this checklist does reference refinancing, which we're not talking about here in this presentation, but Farm Bureau Mortgage obviously does do refinances, in rate and term refinances and cash out refinances. So rents are continuing to rise, and owning a home could be more affordable than you think. Often people think that that they can't afford to actually own a home, but when you take an actual look at the difference between a rent and a mortgage payment, and you take all of the factors into consideration, you're usually pleasantly surprised. Again, this is something that your loan consultant will go over with you. But this is a slide that most people really enjoy and find handy, just to really spell it out for you, what you're actually paying when you rent and the different savings and benefits that come along with home ownership, being affordability. It's becoming increasingly more affordable to own in many regions, Arizona being one of them. Forced savings, building equity in your home is a ready-made savings plan. I think that one slide right there, one sentence right there, is really the critical part for folks that have not enjoyed home ownership in the past to understand that you are building equity every month. Let's just take a look at this middle of the road example of a $1,500 a month rent, which is about average here in Arizona right now. In 5 years, you will have paid that landlord $90,000 versus paying yourself $90,000. And when you look at 20 years, it's $360,000. Sometimes I look at things like that and I think, wow, you could go on an all-inclusive cruise and for that amount of money, because that's basically what you're doing on a monthly basis, is just giving your money away to somebody else, building up their equity train. So that they then have that $360,000 to retire on. So this again is something that a slide that a lot of people really like, and it helps them realize how things like we often hear about generational wealth. This is the kind of stuff that creates it, is home ownership. Also, when you look to retire, you want to have less debt, and if you own your home, you've paid it off by that time, then you don't have to pay these rents, and you will be living in your house payment free, outside of taxes and insurance, of course. Okay, we talked a little bit at the beginning about making sure that you have a team of professionals. So your real estate agent, finding an agent is crucial in the hunt for your new home. Having agents have access to the multiple listing service, and that's going to have all of the homes that are available for sale in them. In addition, a lot of agents have what's called pocket listings. So they might know of people that want to sell their home in an area that you're looking prior to putting it on the market. So that's a really good way to get a jump on making an offer on a home before it gets released to the general public. So finding a good agent is really critical. Once you're pre-approved, I can always help you find a good agent here in Arizona. I am a licensed real estate agent, not practicing, but I know lots of good real estate agents. In addition, if there's anybody within the audience here, or if you know of anybody that knows of anybody within our Arizona Farm Bureau family that is a licensed real estate agent, could you please get their information to me? Because I would love to add them to the list and keep it all within the Farm Bureau family. The things that we want to discuss with a real estate agent before we decide to work with them is, how long have you worked in real estate? Is it your full-time job? Because there's a lot of people that do it on the side, which is okay, but just make sure that that fits into what you're looking for. How well do they know the neighborhoods that you're looking for your new home in? How many homes have they found for their clients in the last year? And have any clients had any complaints or any issues, and how were they resolved? Those are some good questions, just basics to ask a real estate agent while you're interviewing them. It's always helpful to establish a communication guidelines with your real estate agent. Do you call them, text, email? Do they have family hours, times, or because real estate, sometimes timing is key. And so we just want to make sure that we set some boundaries, and so that we don't miss out on anything. The most important thing when interviewing a real estate agent is just to make sure that they understand the area and the market better than you do. What to expect during your home search? Well, the real estate agent is the real estate professional with the negotiations and real estate contracts and the market and things like that. But you know you, and you know what you want. So you need to educate yourself on the area and what your priorities are. discuss with your agent your must-haves, your wants, the deal breakers. It must have a pool, or does it need to have area for a pool? Things like, that. And by the way, being a real estate agent in my former life, these things change from the first home you see to the last home that you purchase. People change, they adjust. I thought that I wanted only a single story, but then I realized I would like a 2-story if the primary is on the first floor, things like that. It's always changing. So communicate that with your real estate agent, and your real estate agent, being the professional that they are going to constantly be probing you and adjusting your wants, needs, must-haves, deal breakers. Do your research on the location. We have always heard location, location, location is the #1 rule in real estate, and it is. You want to make sure to drive from that neighborhood to your place of business and any other important places that you might go during traffic time. What is it? Is it close to convenient shopping, retail? What's important to you? Other family members, proximity to medical care, schools. Even if you don't have children or having plans on having a family, school district is really important for resale value. And how many homes how have the homes valued over time in those areas? So was the first home in that community sold at $250 10 years ago, and now they're selling at $450? Is the value keeping up pace with what your expectations are? And then you also want to work with your Farm Bureau insurance agent to make sure that the home is insured well, and what the rates are going to be for that particular home in that area. Homes actually have, similar to a credit report, homes have like an insurance report on them. So you're going to want to work with your Farm Bureau insurance agent to make sure that the homes that you're looking at, if they have any red flags on them, that they would be, there would be an issue that would raise your insurance rates. Know before you owe. So this is going to talk about something that you probably heard about before, that your mortgage payment is broken out into a PITI, and that's principal, interest, taxes, and insurance. Your principal is the amount that you borrowed to buy the home, and that goes directly towards your equity, like we talked about in the slide about the renting versus owning. So this is where your principal that you're paying to, that's going directly into your equity that then you will enjoy later in your life when you either sell the home or you own the home and don't have to have any more payments. The interest is paid to the lender, and it's the percentage based on the principal amount. Taxes and insurance are traditionally put into an escrow account, where then the lender, hopefully Farm Bureau Mortgage, is responsible for paying the taxes, and then your insurance, hopefully, to Farm Bureau Insurance. Top 5 don'ts, things not to do while you're in escrow waiting to close. Basically, just try to keep things the same. Let's not move money around. No big deposits coming in. I know that is kind of counterintuitive. Money coming into your accounts looks great, but it needs to be sourced, meaning if a large sum of money, more than normal, comes into your account, your mother-in-law gave you $5,000. That's great, but now we're going to have to get a copy of that check from the mother-in-law, see it coming out of her account into your account. It can be done. It's not, it's not necessarily a deal breaker, but it's just going to add some issues that could potentially add to a delay in closing, which we never want. Don't apply for new credit. We see this all the time. You're buying a new home, so you need new stuff, and people offer 12 months same as cash, things like that, which is fine, but too many inquiries into your credit while you're in the process of asking to borrow a large sum of money is going to make an underwriter question, what else are you looking to do? If you're looking to buy a new $80,000 truck, the underwriter might get nervous thinking, well, they're approved for this home loan, but not a home loan plus an $80,000 truck loan. So we just want to make sure not to raise any red flags that are going to require some letters of explanation that it's just investigating, which makes sense, but it just requires some more documents for you to submit which again then could create a potential delay. No late payments. Do your best not to do this. What we don't want is during the 45-day escrow closing that we now are late on a car payment, for example, just because it could impact your credit score, which then could impact your interest rate, which then could impact having to redraw the entire document package, which then could lead to a delay in closing. Don't change jobs. Now, of course, some things cannot be helped. You don't have a choice in this. Just work with your loan consultant. These things do happen, but to avoid a delay in closing, just make sure to communicate with your loan consultant if something like this is happening. And no major purchases. Again, this just has to do with money coming in and out of your account in large sums. If anybody else wants to make large purchases for you, that's no problem. But don't be pulling large sums of money in and out of your account during this time. Looking towards the future of home ownership. So owning a home is a great way to invest in your personal wealth and financial well-being, but it's important to remember that there's no landlord to fall back on. You're personally responsible for all of the extra costs of owning a home. That includes plumbing, roof repairs, interior updates, if your refrigerator goes out, heating, like today it's freezing in Arizona. Setting money aside for these costs may help to ensure that there's no financial emergencies in your future. A home warranty is something that a lot of people enjoy and like. I have one and I've had to use it a few times and I've been very grateful for it. That's something that you can negotiate in your contract. This is something that talk to your real estate agent about, is that you definitely want a home warranty and you would like the seller to pay for it. Those are things that you can ask for. You'll receive a lot of documents during this whole process in your Farm Bureau mortgage portal. You want to keep those in a safe place. You'll have access to your portal forever. But if you want to keep them in another safe place within your household, if you wanted to, when you close, you'll actually get hard copies of them. Keep those in a safe place. You're going to want to possibly sell the home in the future. And so you're going to want to have those documents from when you purchase the home or refinance, like we touched on a little bit earlier. Say 5, 6, 10 years down the road, you want to pull some of that equity out so we can do a cash out refinance so that you can actually start using some of that equity prior to selling the home. So you'll want to have all of their closing documents from the time that you purchase the home. And also for your taxes, you're going to want to keep these documents. And then this is a video that that will be shared when whoever asks for this presentation, we get it out to you. And it's a simple video explaining the history of Farm Bureau Mortgage, and we are in our infancy, but how we came about and then how the application process works within Farm Bureau Mortgage. And so with that, I am going to turn it over to Elizabeth to see if there's any questions. And then we have Dominic here to answer if there's anything that I cannot.
Awesome. Great. Thank you so much. There was a lot of really great information in that, Christy. And we did have some questions come in. Somebody had asked, would it be beneficial to wait to purchase in 2023 or purchase now if you're in the position to?
Ooh. Well, that's a really loaded question. And it depends on so many factors, mostly on the individual. Right now, it is a buyer's market. It's people traditionally. Is there some kind of disclaimer I should say, Dominic?
Oh, no. I mean, I think more from a general standpoint, we'd all love to. I mean, first and foremost, it's what your needs are from a household standpoint, whether or not that's a good time. Or, that's obviously the most important thing. I think from a market standpoint, I mean, real estate, from a lending perspective, as far as interest rates are concerned, I mean, historically, still rates are very good. Rates have kind of popped up, and then if you look over the course of history, they're still fantastic as far as where interest rates are. So, I mean, I think from a market standpoint, there's a lot of things within the economy that can drive a lot of different things. But I think first and foremost, you got to ask yourself what's good for you and your family. I think over the course of time, I mean, owning has proven out to be a very beneficial versus renting. So hopefully that wasn't a straight answer, but that's the best I could give.
And I'll give my 2 cents on that is that you've seen a lot of, if you've been following the market in the last 12 months, there's been a huge shift. 9 months ago, there were bidding wars. People were spending, I mean, use some generalized numbers of $100,000 over asking on, say, a $500,000 purchase. And it was difficult for especially first-time home buyers to win any bidding wars. Now that interest rates have gone up a little bit, the prices have come down. And so I know interest rates being up a little bit is scary because that will, and annoying, because you see a year ago you had, you know, a 4%, and now we're looking in the 6s and sometimes even a 7%. And that's a little daunting. Interest rates are renegotiable. You can always refinance. If they come down, you can refinance. And one thing about Farm Bureau Mortgage for a member benefit that we have is that we do a refinance with no lender fees, and we give an additional $500 towards your non-lender closing costs. So that's going to be like an appraisal fee or a title fee. So if the rates do come down, that is something that we can refinance at a later date. We can't renegotiate the purchase price. So purchase prices being down a little bit might make it a more beneficial time to buy.
That makes a lot of sense. Chrissy, if you want to go ahead and stop sharing your screen, then we can see all of the presenters online, and then I think you should be able to see the questions, but if not. So you actually were just talking about the interest rates, and there was a question that came in about interest rates. Sorry guys, you asked these, and I'm going to kind of go a little out of order. But somebody had asked, what do you think the interest rates will look like in the coming year? Do you think they'll continue to climb or stay about the same? Or what are some things that you guys have kind of predicted?
Dominic, I'm going to let you take that one while I figure out how to stop sharing.
Well, I mean, obviously the Federal Reserve's been in a tightening mode regarding increasing interest rates from an inflationary standpoint. I mean, I think that's going to continue into the first quarter of the year. I mean, don't know exactly what direction from a rate standpoint, but I can tell you what we really want is a stability in the marketplace. Rates have been kind of popping up and down, especially within the last 60 days. We're going to probably see some more normalcy in the first quarter of next year. But past that, it's difficult to predict, but I would anticipate things would calm down and we would get some more stability within interest rates in the coming year. No, mute.
You would think after all of the virtual things we did through COVID, I would have it figured out. One of the other questions that came in was, do you predict the market will be as competitive next year as this year? What are some things that you guys think about that?
Well, I mean, it's always competitive. It's far right now, I would say it's the least competitive. So if you just look at like the new homes, they're throwing in a whole lot of incentives. So if you're looking to purchase now, it's certainly not as competitive, but with the evening out, like Dominic was speaking of, that will drive up the competitiveness. And so that's where you want to have your most buying power in place. So having that pre-approval, which is like having funds in hand, so that you are the most capable person to close on that home, so that the seller would rather take your offer over somebody else's offer, because you can close quicker. By the way, we didn't really touch on that too much, but if you have your loan fully approved, the only thing we're waiting for is an address to do an appraisal on the property, then that can close much quicker than if we're dealing with just a pre-qualification phase. And then even sometimes cash, because the cash person might need to they need to have access to the funds. And sometimes that doesn't happen in 7, 14, 21 days. So the more evening out the market becomes with the interest rates settling down, the more competitive it's going to get again.
That makes a lot of sense. Julie Murphy, who is the director at Arizona Farm Bureau, had popped on She's joining us and wanted you to talk a little bit about the current market and some things and trends that you guys have noticed throughout the year and through the the last year and a half or so since you guys have really got off the ground.
I'll take that.
Yeah.
Christy. Well, so obviously, over the last couple of years, interest rates have been extremely low. There's been a lot of activity in the marketplace, from not only from a refinance, from a purchase standpoint. We continue to see a lot of great activity from a purchase standpoint. Obviously, refinances have slowed down a little bit with interest rates climbing and everything. But we're still doing refinances, and that's depending on if a customer is needing cash out on their house or the home improvements, things of that nature. Market right now, interest rates are relatively volatile. It's all over the news. We expect some stability in the first quarter next year, but obviously it's anyone's best guess. Disclaimer is we don't know exactly where interest rates are going. But I've been doing this for 30 years. And so I've seen a lot of different cycles where rates go up and down, and I think there's a lot of positive things within the marketplace, but obviously the economy is going to drive a lot of that. So hopefully that answers your question.
In a roundabout way, yeah.
Yeah.
Interest rates are always a tricky thing to talk about. And the general rule of thumb, I'm just shy of the 30-year mark of Dominic saying, and for anybody in our Zoom universe here that's been around, that I remember being so happy when they dropped below 10%. The general rule of thumb is anywhere to between 5 and 7, which happens to be right where we're at right now, is healthy, meaning that other parts of our financial infrastructure in America are running well. Our unemployment is at a healthy rate. Other markets are running well. So when they're as low as they were, that's usually an indication that we're needing to make up for some other things that are occurring within our financial infrastructure. So will they hit as low as they were again? Again, we would have a crystal ball, but I think that was a fix of a problem trying to overcome from years and years ago.
Earlier in the presentation, you had mentioned that it's that you consider this a buyer's market. So what makes this really a buyer's market versus a seller's market? And then if somebody is considering selling their home during this period of time, what are some things that they can keep in mind, or some things that they should be aware of, kind of coming into this process?
Sure. So when I say it's a buyer's market, that's compared to what it was 12 months ago. We actually are more in one of those even markets where it was insanely a seller's market 12 to 9 months ago. And now it's evened out to be a little bit more reasonable. But because it was so extreme on the other side, it's like, okay, finally buyers can, like real buyers, not just investors, can now participate in the market. So I'm actually going to retract and say it's more of about the same, being an equal buyer-seller market. Inventory we're not saturated in inventory, so that's good. So that's why that doesn't make it a complete buyer's market. If it was a full buyer's market, we would have, there'd be 6 homes of the same floor plan available in each neighborhood. So, and we're not seeing that. Homes are not going off the market in 1 to 2 days. So it's not a seller's market. So we're kind of on that more in between, but coming off of where we were, it feels like, okay, finally buyers can come back in. Now, if you are selling your home and you want to, again, this is something to speak to a full-time real estate professional. So that caveat, having real estate experience and being a licensed real estate agent, I can speak to it, but again, it's not my full-time profession. But if you are looking to sell, you're going to want to sometimes do some seller concessions, help the buyer with some closing costs with the coming. We talked a lot about how monthly payment wise, home ownership is right in line, if not better than renting. Then why doesn't everybody own a home? Well, it's often the cash to get into the home. So anything a seller can do to help a buyer with any of the costs associated. They can't help with down payment, but they can help with some of the closing costs. So seller concessions certainly help. And then obviously just presenting your home as well as can be, the decluttering and all of the things that the real estate agent is going to suggest.
I mean, I think what I would add, I mean, beyond the real estate market, because this is such a regionalized thing based off of buyers, sellers. I don't like to get into a lot of that, but maybe from a lender's perspective, it's a great time to buy. There's a lot of programs out there right now, a lot of first-time home buyer programs. Our lending standards are I mean, it's the mortgage business. It's much easier today in many ways to get a mortgage, and much more difficult in other ways. I think that's part of the reason why it's so important that we provide education and we provide loan consultants and we take a buyer from beginning to end. But there's a lot of incentive out there to get people into homes. I mean, we can talk to that from a lending perspective, and a lot of programs and such. So.
I know a couple of years ago when my husband and I were looking to buy our house and sell the house that I'd purchased before I even knew he roamed the earth. It was wild. There were houses that were off the market within a day that people hadn't even got to see. They were making offers on, and It was really daunting being a first-time home buyer, essentially trying to make those good decisions and talk to our realtor and really just make the right decision without feeling the pressure of having to offer something without knowing, being fully comfortable in it.
And I think that's part of what this is today is the educational process on it. It's to be prepared for when you're ready. I mean, ask if when it's the best time to buy or sell. I mean, it comes down to the individual family, but I mean, family looking for it. I mean, our job and our vision is from a lending standpoint, it can be daunting for a home buyer. And to check that off the list, it's hard enough to find a place and that you love and a lot of different things within the real estate transaction. So, I mean, my one piece of advice is to start early in the game with the lending process. Get pre-approved. That's one less thing you need to basically concern yourself with. Because, like you said, it's and then be prepared, because when the market's really hot, you have multiple people bidding on it, and you kind of have to have that checked off to make your offer look better. So. Anyway, sorry.
Yeah, if I can piggyback on that, Dominic, you're saying about starting early. Another member benefit that we offer at Farm Bureau Mortgage is our financial solutions program. And this is a program that's going to help anybody that might not be ready right now, but they are looking forward to home ownership in the future. And what this program will do is help them raise their credit score. So even if you've got great credit, let's say, you're at a 640 or 680, well, your interest rate goes down the higher your credit score. So if you're looking to purchase next year, 2 years, however, let's make sure that your credit score is as high as it can be so that you can get the best interest rate offered. So financial solutions program, again, that's a program that you can contact us at the at farmbureau.mortgage or the toll-free number, and we can get you enrolled in that program. It's similar to a credit repair type of program, but it's not quite that. But if this was a program that you were going to access off the streets, it's on average about $100 a month type of program to involve somebody in. And what they'll do is I take a full look at your financial situation, throw it into a simulator, and it will say, do this, do that, don't do this, don't do that. And your credit score should be at 720 by April, things like that. So just reach out to us and ask about FSP or financial solutions program. And hopefully maybe in another webinar, we can dive into that a little deeper.
That's really great. I wish I knew that something like that existed when it was us. I think you're right, being prepared and doing a lot of the research and feeling comfortable with the process makes it a lot less daunting. And I was in the same situation, Christy, you'd mentioned on the side talking about renting. I think a lot of people, especially, kind of the younger millennial group or older millennial group, is right in that we're buying homes, but we're not really sure, or we could be or should be, but we just automatically think that we can't, we're not going to be able to, we won't be able to afford it. And it is kind of intimidating to imagine yourself purchasing a home.
It is. And that's why being in this industry, both on the real estate and the finance side of it for so many years, it's so interesting that usually the most qualified people are the ones that are so scared to talk about it or want to investigate it. And what a relief it is when they actually do talk to somebody that they feel comfortable with. Talking about money is uncomfortable. And looking at your credit report and, oh my gosh, you didn't pay your dentist in 1998. And, you know, that's not a comfortable thing to take a look at. So having somebody within the Farm Bureau family that you can just consult with, that isn't any kind of high pressure anything. Our loan consultants are just that. They are consultants. They are here to talk about it with you, to say pros and cons, do's or don'ts. Even if you are comfortable with a lender that your family has worked with in the past, no problem. Consult with Farm Bureau Mortgage so that they can look at it and say, no, this is a good, all fees are correct. There's nothing in there that looks outrageous. Or we've done this for a few people that let us give you a loan estimate and use us as a negotiating tool because you're comfortable, you want to keep it there, but our program with the benefit of being a member with the no lender fees and the extra money towards closing, you want to get the benefit, but you want to stick with your current lender. Well, sometimes they'll match. So let us give you a loan estimate and use that to get the match. That's really what we're here for, is to protect Farm Bureau members from what can sometimes be a not a great experience. So hopefully you stick with Farm Bureau Mortgage, but that's not our end goal. Our end goal is to make sure that all Farm Bureau members feel secure and protected during a mortgage process, whether it's with us or somebody else.
Yeah, purchasing a house is typically the single largest investment of people. So, I mean, obviously, when we were creating Farm Bureau Mortgage, we understood that we wanted to provide a service and a member benefit beyond everything else. Beyond the financial benefit, but having a trusted advisor. So whether you have an existing lending relationship, like Chris said, I mean, free of charge, our loan consultants are here to be a second set of eyes if you have an existing relationship, but also educational too. So I'll leave it at that.
No, that's a great point, is you can use it as a negotiation tool, and really the no pressure look at, you know, your financial situation, how to improve it, I think is really helpful, because it is, some of those conversations, especially when you talk about finances, do get uncomfortable, and it unearths some of those things you didn't know exist. I didn't realize there were some, you know, aspects to looking at financials for my husband and I both that we, you know, you have no idea until you actually go to purchase something large like this and someone sits down and walks you through it. And then having a good relationship with your lender, that you don't feel the judgment and you don't feel embarrassed to ask those questions and say, you know, this is my end goal is homeownership. How do I get there? How do you help, you know, how can you help me get there? Perfect. Well, I haven't had any other questions come in a little bit, but what I will do, so Chrissy had a video that she wanted to share with us that we were having a little bit of audio trouble with. So I will, when I upload this to the Arizona Farm Bureau website, we'll send an email blast out with that link so you can view it online as many times as you want and save it. But we'll also post the video, and I'll also have Dominic and Christy's contact information as well.
Fantastic.
Yeah, perfect.
That's great.
So, thank you guys so much for joining us.
You.
I look forward to doing you know, some other webinars that kind of segue off of this one in the future, because I think this is really great information for our members to have. So thank you guys for taking time out of your busy day. Thank you everyone who joined us.
Thank you.
Have a great holiday season. Be safe, be well, and we will see you in 2023, which is wild to
Take
say.
care. Bye-bye.
Bye.
Bye-bye.
Have a good one.